Hi, Joe Neighbour from Signal Centre. This is the latest roundup on oil markets and from a technical perspective and also the latest headlines. In terms of what's going on at the moment, there are some geopolitical risks and potential for further attacks on infrastructure in the United Arab Emirates, and that is keeping the oil price at inflated levels at the moment. We're still in and around these 7-year highs that we've referred to in previous videos. So this is the daily chart that we have in front of you at the moment, and as you can see, prices are continuing to stick around this $85 a barrel marker. We're currently at 85.68 at the time of the video. Very much on the front foot today. Prices up by over 1%, and that's following further gains from that we saw yesterday in yesterday's session. So we continue to look pretty strong on the oil front. There doesn't seem to be any let up in the performance. And if you can compare that to what we're seeing elsewhere in other markets, particularly equity markets at the moment, you are seeing a massive divergence here between the performance of the equity markets and the oil price at the minute. So it is doing a pretty good job really as a protective asset at the moment, and seems to be holding up quite well. Doesn't seem to be any let up at the moment. There's no kind of top formations taking place for now. So as demand continues to remain strong, we are expecting to see higher prices in oil. Above here, you'll notice that we've got some resistance levels, just to sort of bring you into the picture as to what they are and why they're relevant. If we scroll all the way back to the left-hand side of the chart, we can see some previous resistance or previous support levels, which now should act as resistance on a retest. If we go out to the longer term charts and take a look at it from a weekly perspective, the reason we've got these Fibonacci levels on the chart is because we've got this high from back here in 2008 when oil went up to nearly $150 a barrel, and we've taken those fib lines from that high down to the low that we posted in at the height of the pandemic in April 2020, and what we have there is a 61.8% fib level at 95.66. So we expect that will do a reasonable job as resistance. It's also into the sort of cluster of previous levels that we saw dating back to sort of 2014 from 2011. We also have taken a look at the 78.6% fib level of this high here in 2011. So that's following the sort of crash that we saw after those highs at around about $150 a barrel. So the highs there in 2011, again down to those pandemic lows. And we've got 78.6% Fibonacci level, which comes in at 93.23. So we have a confluence of areas or confluence of Fibonacci resistance levels here to target. And I've highlighted that by drawing on this resistance zone. So for me, it looks like higher prices are to be expected on oil, and I'd probably be looking for a test into this kind of zone here. So this is where we've got some really firm resistance on the longer term charts, which could attract some potential selling interest. If we take a look at price action alone, then the low that we have here from January 2014 could also act as a bit of resistance. Again, it's all sort of marrying up around the same sort of zone between sort of 91.50 to 95.66, which, you know, if we're looking in a short-term time frame, is obviously quite a large range. But when we zoom out to the longer-term time frames, you know, it's quite a relevant range for us to look at, I think, on the upside. One thing I would caution, having looked at the weekly chart here on oil, is that 1, 2, 3, 4, 5. Particularly, we're potentially into the 6th week of consecutive gains on oil. So it maybe is looking a little bit overstretched in the very short term, but things, you know, appear to be pretty strong for now. So you'd be a brave man to back against it. So it is crude inventories today, 3:30 UK time. We have the US EIA crude inventories number due out. The previous week saw stockpiles rise by 515,000 barrels. So 3:30 this afternoon. Take a look at the oil chart, see what's happening. If you've got positions open, be aware of that number out as well, because there is likely to be volatility. Beyond that, today we've got the FOMC coming together at 7 p.m. UK time to discuss the rising of interest rates and also the tapering of quantitative easing. Not sure whether or not that'll have a huge impact on oil or not. But the other thing to take note of is at 3 o'clock today UK time, we have the Bank of Canada rate decision. There is obviously quite a high correlation between the Canadian dollar and the price of oil. So that could be potentially an influential piece of data that's due out today at 3 o'clock, and then obviously followed up by the inventories at 3:30. So all looking pretty good on the oil front for now. Looking for higher prices into that zone between sort of 92 to 95 and a half dollars on oil over the short to medium term. Hopefully that was helpful. I'll be back next week with a further roundup on the oil markets, but until then, guys, trade safe. Goodbye.